So I have a lot of opinions and experience with identifying rotation. It's really my kind of mother's milk, if you will. What I do from a market analyst perspective is to use macro as a backdrop, of course, to look for event risks that can be market moving, not just because I run a live trading room, but because I am setting up for clients, both retail and institutional, protection for those who have portfolios, not to mention lots of active trading and active investing, including on a chase time frame, those who are really, excited about a particular directional move, using options and short duration, like what we have right now with this correction. But my point is that I look for it. I look for sector rotation. And I have a saying, in lieu of sector rotation, there will be volatility. So this recent phase I have been in sync with because it is something that I focus on. When we started to get kind of the AI bubble talk, which was, we've really extended this run, both because of, Fed and Treasury easing for the most part, since this November 1st Fed pause and the Yellen Yahtzee I like to refer to, which is Yellen provides lots of short duration bills versus longer duration bonds and notes for the market. It's very liquidity pleasing, right? So we've had this amazing run into the hot sun of equity markets since that November 1st low. So then we get into this kind of, AI's really extended, and we had big wirehouses coming out, right? We had Sequoia coming out, PE saying, yeah, we think it's cooked. Goldman came out with a big report. Citibank, Barclays, Dan Niles. So it was really this ringing the bell at the top. At the same time, valuation was extended. So we just really needed a little bit of a push to cause this deflation in assets. And we got it with a CPI print a few weeks ago that was negative month over month for the first time since May of 2021. And I was tracking not just the kind of AI narrative, when does it reach its zenith, but also deflation impulse that would help bring yields down and, kind of cause this valuation and forward earnings to be revisited as, okay, we really need to take some chips off the table into earnings season. So it was really a perfect storm, honestly, before this rotation triggered. Then on July 10th, which, we're doing this recording on the 25th, I did a client post that, and literally the title, Option Flow is Stalking a Market Top. So at the time, there was a ginormous bet. A big whale came in. So market structure matters to me. And a big whale came in and basically said, no, this is a do not pass level, which happened to be 5650. That corresponded with a NASDAQ 100 target that I had given to clients prior, months before, of around 504, 507 area. Just so happened they hit at the same time, and we rolled over. So not only did we have an option flow dynamic, we had the CPI with a deflation impulse. At the same time, we had the AI bubble narrative turning and Fed rate cuts picking up in speed as they had not been really priced in, but now they're like, oh, you know what? I think we're going to see one in September. So fast forward one day, the Qs topped and the rotation started. So it is very, very telling as well. We have this kind of function called hedge fund factor rotation, and it's where market neutral hedge funds, they're called pod shops for those that are in the biz. But the point is they are long the VIP stocks and they are short, let's call them oversold value, but they're also affectionately referred to as dash for trash, right? So the stuff that is in protracted downturn and they just keep shorting, and the stuff that's in a protracted uptrend, Mag 7, Mag 10, right? The FANG stocks and then some, the semis, they just keep pressing. And then there's an unwind that occurs when they have to cover short, right? Cover short the value rotation and they sell out of their VIP stock. So you had the perfect storm for a rotation, right? You had the options coming in, the inflation, the turning deflation, et cetera, et cetera. So that is what I wrote to clients on July 11th. The narrative shift can absolutely contribute to a sizable unwind in the concentration risk that has suppressed volatility. Know what you own.
Do you think that this is a short covering rally, a short squeeze in for the small caps, or do you think that this is kind of the bottom with the Fed rate cuts? So if the Fed only cuts rates, 1/4 point, or it's really slow with the rate cuts, do you think that that's going to put a bottom in the small caps, or do you think that this is just a bear market rally or a dead cat bounce for the small caps then?
No, I think that this is very much started by hedge funds short covering, and you can absolutely have a trend reversal from short covering. But small caps, as you also know, in the Russell 2000 constitute 40% of unprofitable companies. And when we have an economic growth slowdown, they are going to be hit hard. So it's not that small caps are going to be the best game in town. There are some large cap value plays that'll do a lot better. And more specifically, the safety will pay. So this kind of, let me just kind of frame this. The de-risking that's happening or has been happening now, right? Because I've been on this since literally July 9th, 10th, all the way through, even July 17th. Is the forced selling done in tech? No. So I'm still seeing that they are de-risking out of the concentration bet and they're short covering, but it's not a rotation. That's not necessarily the right word to use. They're just de-risking. In other words, we just lost, let's see, the other day, what was it? 1 trillion, 2 trillion. Okay, we lost, case in point, $2 trillion in 10 days in Mag 7. That 2 trillion in market cap did not rotate into small caps. No. That just came out. At the same time, the funds were covering and the safety plays were in play, meaning look at staples, look at healthcare, XLV, it's all-time highs, right? Pushing higher. Staples, of course, home builders as the 30-year is falling, the move index is softening. So we have this, rotation into defensives, also utilities. They're not suffering. So this is very much a de-risking moment for growth. And it's a narrative shift for sure out of concentration risk. It is forced selling. It's been very, very controlled. This is not panic. Only did VIX start moving higher. And this was also kind of a really, really great timing because last Monday, volatility of NASDAQ actually gapped above its 200-day. So I knew that NASDAQ was going to get hammered even more. But this is part and parcel of we are now forcing recession risk forward. And I think that that's why Bullard came out just yesterday, was it? And he said, I changed my mind. I'm not a hawk anymore. I think they should actually cut next week.
Wasn't it Bill Dudley too, the other former
Dudley. You're right. Yeah. So the point is that they're now kind of shifting the narrative from inflation to deflation into the rest of the year. That was my main kind of second half of 2024, where I warned clients, be careful. This is actually going to be a fabulous time where safety pays, tech will have forced selling, and Fed rate cuts are coming. And yes, it was the Bullard op-ed in Bloomberg that highlighted all of a sudden, what do you mean? What do you mean got recession risk? Where'd that come from? And it's kind of a head scratcher for some folks because they look at the GDP print that we got today, right? Which was like 2.8%. But a lot of that is inventories that are pulled forward, worried about, maybe a Trump presidency and they, suppress the dollar further and all those tariffs on China companies and commodities. So they're kind of getting all their inventories pulled forward as an example, right? So there's also a lot of spending that gets pulled forward in that the GDP print, which was quite strong, but it's not going to repeat itself later. Growth abroad is still abysmal. Corporations are hit by a strong dollar relative to local currencies. The trade deficit is still widening. So I don't think that this GDP print that we got today is a sign of economic strength. I think it's an outlier, and it's going to revert.